All right. Hello, everyone. I have a very special guest today. We're going to be talking about finances and the mortgage industry and what that looks like going forward post-Trump election. I have Miss Katrina. Now, I'm not going to even try to pronounce your last name. How you pronounce your last name?
Luchasano.
Okay. And buddy, I was watching Godfather yesterday.
Oh yes, yeah. That was my husband's family.
So yeah, I wasn't even gonna try to pronounce your last name. Great, great.
Right.
Hi, Katrina. Tell everybody about you, about how long you've been in the business, and what's going on with you.
Yeah. So first of all, thank you for having me. I know we've known each other from back in the chamber days for probably, I guess, over a decade now.
It's been that long?
I
Wow.
think so. Yeah.
Oh,
Yeah. Yeah. Yeah.
you still
But
like
yeah,
me? That's good. You still like me? That's good. Good.
I know. I
We still
know.
talking? Yeah, yeah, yeah.
Yep. Yeah, so I cut my teeth on the mortgage business back 32 years ago.
Are
And
they young?
so it's been a minute. I've experienced a lot of ups and downs, and really probably only about three times where it was scary. Of okay, my gosh, what's going to happen. Obviously, the mortgage meltdown was huge, 2008 to 10. COVID was very scary. We all just didn't know what to expect. I mean, workers being laid off left and right. But for me, yeah, so my story, I had
Okay,
my
that was two times.
yes. Well, and then we had back in, let's see, it would have been, oh gosh, 20 years ago at least. Actually, probably more like 25 years ago. Was it Black Friday? I'm trying to remember. So we had where the stock market just plunged and the interest
Okay,
rate went up
okay.
over a percent in like 2 hours. So back
Was that
then,
the .com boom?
yeah, I think so.
Okay,
Yeah,
I think so.
yeah,
I think so. Right, 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 right. A
yeah.
bus, not boom, but bus. Yeah,
Yeah. And
yeah.
now we have, this market. But yeah, so I feel like because of the time that I've been in it, so I have enough pans in the fire, I should say, of many different sources of clients. So it seems like, we hear, right, credit card debt is increasing now. So I've had that conversation with people okay, what would it be if I did a cash out refi to consolidate?
Mhm.
So it's just the, ebbs and flows. And then people who now realize that these rates are probably not going anywhere. So home prices are still going up. So there's that reality of, gosh, if this house comes on the market.
Don't tell everybody. Don't tell everybody because the media's saying otherwise.
Yes, exactly. Yes. Yeah. So if the house comes on the market, and there are life changes, right? You've got divorce, death, financial devastation. So which will cause sellers to have to put their house on the market, even though they may have a 2.5% interest rate. So when those houses go on the market, they go fairly quickly if they're priced right and are in good condition. And the buyers for those are usually in that haves category. So you've got the have and the have nots, and usually those buyers, they don't have to sell their home to qualify for the next one.
Mhm,
So they can go ahead, put their offer in, get it accepted, move into that house, their new home, and then they put their current home on the market.
mhm.
And we have where, well, all the lenders allow for recasting, which is where if you start out at say 500,000 loan and you sell your current home after you've moved into your new home and you now have a profit of 200,000, you used to have to completely refinance, spend all the potential closing cost on a refinance. And now, if the rates are still the same, you can just drop that 200 as a recast on your current loan, and then your payment will be reset on your balance at that time with your remaining term and the interest rate. So
Right,
that's helpful for people.
right, right, right. Now, just to shine more light on your experience, you're now working with Silverton Mortgage, which is backed by one of the biggest Berkshire Hathaway, which of course everybody knows is owned by Warren Buffett. But you started more humble beginnings. You
Yes.
started out being a sole proprietor. Tell people how that makes you more experienced than a person who comes right in working up under a company.
Yeah, so back in 1995, I had started my own company, and it was back then it was a family first mortgage, mortgage broker. And yes, from having to literally handwrite applications, the typewriter, doing everything front end, middle, and back end on the loan. So I did the verification of employment. I did the verification of deposits, the appraisal ordering, the title, having to review the title from the closing attorney, getting the homeowner's insurance policies in place, reviewing those coverages. So we have now where at Silverton, we are a lender. So I have a full-time assistant who they order the title, they get the homeowner's insurance, they submit my loan to underwriting, they get the verification of employment. My loan processor, after the loan comes out of underwriting, she will collect any conditions. So it might be um, proof of the earnest money clearing, and squaring away the loan for the closing department. I did all that. And then I even was able to print my own closing packages. So yeah, it was just and picking up the closing package or taking it to the closing attorney back before email and courier. So
Right, right.
yeah, and then also maintaining my database. So literally, this time of year was very stressful for me because at Christmas time I would hand write over 1,000 uh, Christmas cards for my clients. Yeah,
Really?
yeah. And back then, they didn't have email, so it was really nice because people they loved getting my Christmas card.
I'm sure.
Um,
I'm sure.
and now, right, if I sent a Christmas card, they wouldn't even open it.
Oh,
All the
really?
Well, most people, they go through their mail and it's
I always thought that handwritten things are a lot more appreciated now.
I I don't see where that's, and we've tried it. I've tried it over the last few years doing used to do an oversized postcard for birthday.
Yeah,
Um, and yeah, I haven't, I guess just I haven't had as much
yeah. It's
to
interesting.
say either way. So it seems like, the work that's involved, we would have to hire somebody out now to do all that. Whereas, I can, with these CRMs, be able to send weekly notifications of what's going on in the market,
Hmm.
rate fluctuations, your anniversaries on your,
Gotcha.
yeah.
And that's kind of just the way of the world now, right?
Yeah, I think so, right? Yeah, I don't even get too many Christmas cards in my mail. And if I do, if it has sparkles on the inside, I'm not even going to open it. I can feel
No, yeah, yeah. Get
it.
all your clothes all everywhere. Yeah, 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 yeah.
Hate that.
Now, with that unique experience, doesn't that give you more insight in the process, where you be able to, since you had to do every step yourself, now you able to see if if there's a potential bottleneck
Yes.
or monkey wrench that you're able to catch that ahead of time.
Exactly, right. So it might be looking through somebody's bank statements and just noticing that, there's a reoccurring monthly obligation that is not on their credit report. So being able to address that up front, with their pay stubs, it could be that there's a year-to-date bonus, but yet they didn't have one last year. So I'll need to be able to know that's extra income, right? That could help somebody qualify.
Mhm.
Even on the credit, to be able to look at somebody's credit and to be able to see how long an account has been open, what the credit usage is, if it needs to be paid down in order to improve their credit scores so that they can get a better interest rate. So it's actually pretty cool. It's like spinning a wheel. And,
Right, right,
if it
right.
comes up, then, I can just address it really quickly. So yeah, and that makes it fun. That keeps it, for me, being 32 years in the business, it keeps it interesting because it's just,
Right, right.
you know,
I think on the other side, I think the customers or potential clients also like to know where their application may look like with underwriting. And
exactly.
you already have that experience to know what underwriting may look for as a positive, what they may look for as a negative, or what they may look for the uh-oh kind of thing.
Right. Yeah, because most people, that's it, right? They just, if you tell them up front and you're honest with them, this is what we need to do. This is going to give you the best options. That's all they really want to know. And then, of course, the real estate agent,
Hmm.
they don't want to put somebody in their car who hasn't gone thoroughly through the underwriting process. And they don't want to present an offer to a listing agent when it's a multiple offer situation and they're not sure if John from Internet Bank has really run the credit because sometimes they don't. I'll look, I don't know how many times I'll run a credit and there will be no other credit inquiries. And that person thinks that the buyer thinks that, oh yeah, I talked to bank A and they said that, yep, everything was good. And they never ran their credit. They just talked to them on the phone and walk through, yeah, I do this. This is how much I make. These are my expenses, but yet they haven't run the credit.
And what does that mean?
Well, so then they don't know what their credit score is. So they don't know, and that is huge. So you have to have, there's different buckets for the credit scores, which determine your interest rates and determine what kind of product you can qualify for. So if you haven't had your credit run, and we can do either a soft pull, which is not a hard inquiry, but if somebody is ready to buy, like they already have said, yeah, I'm going to be buying in the next, 60 to 90 days. I need to run that full credit report, all three credit bureaus, because the soft pull is only one credit bureau. So we need to be able to see all three credit bureaus and I need to be able to run the loan through our automated underwriting system, which is required on every loan. Anybody who you work with, that's going to be required.
Now,
So,
generally, someone would look at doing freecreditreport.com, something like that, and they go and pull their credit, supposed to be from all three bureaus.
correct.
Is that the same?
No, so that those scores are going to be higher than the mortgage scores. So every mortgage company, if it's a broker, a credit union, a lender, a bank, it doesn't matter. We all pull from the same service.
Hmm.
So our scores are all going to be the same. Unlike if you're shopping for a car, you could have five different dealers give you five different
And why
credit
is that? So,
scores.
so y'all don't pull from the three major ones?
We do, right, yes, but it's a standardized system that the mortgage companies are using.
Okay,
So ours was standardized. It's been actually for several years that it's been standardized.
okay.
And with that being said, so our SKUs range, or the range, I should say, goes from about 400 to 850 approximate. But if you pull from the free credit or any of your credit card companies, even Credit Karma, they're all going to show from 3 to 350 up to 950. So
Good or bad?
yeah, well, so you're going to have a higher score. So many people, they have a false hope that their score, they'll call me and they'll say, oh, yeah, yeah, I know my score is, 680. And I'll know if I hear 680, well, where did you get that from? And they'll say, well, Credit Karma, my TransUnion and my Equifax score, because that's all that is on Credit Karma.
Yeah,
And then I'll say, well, go to Experian.com.
right.
That tends to be the closest to our scores.
Okay,
So Experian.com is separate from Credit Karma.
okay.
And that will be a little bit closer to our score. But
Now, when you say Experian, do you say Experian, this is pull Experian, or do you go to Experian to pull all three from Experian?
so you can't, well, no, you can only pull the one.
Oh,
Yeah, because Experian is pulling from Experian. And then otherwise you'd have to go to Equifax and TransUnion because all three are the separate
okay,
bureau.
okay,
So Credit Karma, you can get a gauge. So if somebody says to me, oh yeah, my Credit Karma says I'm 780, I know then that their score is going to be excellent. I don't have to worry about it. So then I could do a soft pull and be able to pull just one bureau and see that it's 760.
okay.
And I know that the other two scores are going to be fine. But
So
if I,
would a 680 from Experian be good?
that should work, but that still would tell me though that if whatever your time frame is, if you're thinking that you're going to buy within, again, I would say 3 to 4 months, then I'm going to want to pull myself that, because if mine is 650 or 660, because it's going to be a little bit lower,
Mm,
then I want to be able to direct you as to how to get that score, possibly over 700.
okay.
We have credit simulators.
Okay.
So that would be helpful for you to go from possibly an FHA loan to a conventional loan. An
That's the difference,
FHA,
huh?
yeah, that's a big difference. Yeah.
Wow. Wow.
Yeah.
What
So,
what are good credit scores now?
gosh, I mean, there are people who literally are still right around 600, unfortunately, just because they've had some oopsies, or, that really a lot of it is maxed out credit cards. And that would be
Yes, I've
from,
seen that.
yeah. So a lot of folks, are just, and if I look at their bank statements, you can see, Dunkin' Donuts, Wendy's, and then unfortunately, right? And then,
But
those are the ones that seems like the credit scores are lower because they have maxed out credit cards, because they're just not being good money usage. And that's good though, right? Because if it's a year that I have to tell you, okay, go ahead, renew your lease for a year on your rental. And then in one year,
wait, now you just came from 90 days, now you're going out to a year.
well, because their credit score is so low, it's going to take them that long. Yeah,
Problems.
it's going to take them. Yeah, yeah, yeah. It's not going to happen overnight. Let's put it that way.
I get that.
Yeah.
Is that common now? I mean, because I know I hear stories of people robbing Peter to pay Paul, like you say, matching that credit cards. As you say, it's like $7 trillion in credit cards, some enormous amount like that. So
Yes.
do you see that to being a major issue, especially for new time buyers?
Yeah, that definitely is an issue. As a matter of fact, I did a home buying seminar for 19 first-time buyers Friday.
Mm,
And one of the questions was, well, I just got an increase on my credit card. And so I said, that's good. Now, interesting enough, I said, gee, I just got an increase on one of my credit cards. And then another borrower said, I also got an increase on my credit card.
is
So
that
what we
good?
were thinking is Black Friday shopping coming,
Okay.
but you see what's going on. The credit card companies are out there saying, oh, here you go. You can now have 5,000 more of a limit, and there's people who will use it.
It's like
Now,
a
if you're
puts you in a junkie, right?
Yeah, yeah. So if you are really 20% is what you want to be at and under on your credit card usage.
Mhm.
So for the two folks the other day, I said, that's great on the credit increase. Just don't increase your balance. Keep that balance at what you are right now with your current credit line. And then that's going to help your score, because it shows now that you're even lower on, you're probably only going to be at 5% on their credit usage. So that's the revolving
How
debt.
important is that credit?
Number one. Yeah.
Number one.
Yeah. Number one, the revolving debt is your number one credit score bang for the buck.
Not
So
late payments?
no, well, keeping that low balance, keeping your low, a very low balance compared to your credit limit. That's the number one thing. So I don't know how many times I'll do a credit simulator, and because you can't change, and these are people who, you're not over 30 days late. It's only if you're over 30 days late that it reports to the bureau.
Okay.
So, some people, if you are at 29 days, it's due today, and you're, making the payment on that due date, you don't have to pay it off, but just
Okay.
make sure you're not more than 30 days late ever, because that will get posted. And one 30-day late payment will take a 700 credit score to 650.
Oh,
And it's, yeah, and to get that 650 score back to 700 is going to take almost 2 years. It takes a long time. Yeah.
so even in today's economic climate, people are paying their bills before 30 days. They just messing out the credit cards.
That's the other problem, because the credit card may report, say on the 10th of the month, when your payment is due on the 15th. So you think that it's fine.
Okay.
Like for me, I use my card and I pay it. I use it, I pay it. But I don't know how many times, if I were to pull my credit usage, it'll show that I actually have a balance because the credit reporting reports at a different time than when I'm paying my card.
Right. And a lot of people
So
they don't understand that part.
yeah, and then the other, any open account, so like American Express, if you have a $10,000 limit and you use it for business travel, and then you pay it off monthly, if you have a 10,000, all of those, there, it's an open account, so it appears that you're maxing out your credit card. So with those types of cards, those are the gold cards.
Hmm.
So that's hard because, many times it's not a limit. People are just using it and then they're paying it off, getting reimbursed from their employer.
Okay.
But those are tough cards because it will show that you're maxing out that card every month.
That's a bad thing.
Yeah, it's a bad thing. Yeah.
Wow. And even though
Yep.
they may think it's a good thing because they're paying the bills off.
That's right. They think that I'm paying it off monthly, but you're right. It's because it's reporting when it's the max amount, not when you're paying it.
Ah, oh, so
Yeah. That would be nice. Yeah.
yeah, yeah, yeah. I mean,
Yeah.
that's something that I mean, because I never had that experience having a gold card, but you would think that because you're paying it off, that because that used to be how American Express first got started, right? I mean, you couldn't do
Right.
American Express unless you paid it off every month.
Yes.
Now
Yeah.
people are locked into that mentality, especially at that level of income, and now you're
Yeah.
saying that's not necessarily a good thing.
Right. Yeah. And in installment loans, you don't get that much bang for your buck anymore. So car loans, student loans, even your mortgage, because the assumption is that, well, you got to make the payment or they're going to take the car or
Hmm.
they're going to take the house. So really revolving debt is going to be your number one credit score determiner.
Interesting, interesting.
Yeah.
So tell people what should we look for now that it's post Trump and hopefully come January with 26 that things are gonna looking better, be looking better, or be looking worse, or people still gonna be kind of like kind of biting their nails and sweating bullets over their
I think, yeah. So from what we're seeing and from what I personally think is that after it's not going to be a quick thing that's going to happen where the interest rates are going to drop down 1% and where home prices are going to level off. So right now, even though the interest rates are hovering high sixes, um, it's still it's going to take a lot, right, to get those rates down to where those people who are in that 3% market are going to be willing to list their home. So it's really not an inventory thing so much as it is a rate thing right now. And with the or the new administration, it's going to take a minute before, I mean, my guess is we probably won't until, spring be able to see any type of, um, I guess, softening of the interest rates significant.
Mhm.
And the way it works too is so when the Fed just lowered the rate, and that was the Fed rate, a 0.5% here a couple weeks ago, 3 weeks ago. Well, the bond market actually pushed the Fed to do that reduction by saying that the economy is weak. Well, once the Fed did the decision, then literally that next week, inflation reports came out that were still showing inflation. So the market we went from 7% to 6%. I had some closings this month at 6%, right back to 7%. So yeah, so the market, it goes down very, very slowly, very slowly. It could take, I've looked the last 3 days and the market's actually been pretty decent, the bond market. So the assumption is that, well, the rates should be about 0.25% less. And it's just creep, 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 little tiny bit. But if the market was negative for even one day, we could have an increase from 6.25, 6.5% all within a day. So with that being said, I really feel like the home prices that's the king of it, right? That's the wealth building. So if you can find a way to get into the house, we have so many programs. There's no down payment programs. Um, I've even had a couple of young folks talk about, you know what, I'm going to have a roommate, but I've had the same roommate. Why don't we buy a house together? And we can have the title situated so that if something happens to the one, the other party is able to buy out the other party.
Okay.
Um,
So
so
you had that conversation
yes,
in
yeah,
in
yeah.
that instance. Okay.
Yes.
Okay.
Yeah. So I think just having some creative ways because, if somebody, and that's if somebody can't afford to buy themselves, because with the interest rates and with maybe, as a first time buyer, if you're looking at a 350 price point, and then if it's a townhome, you're going to have homeowner association dues. So your payment could get up there. But if you can't afford to buy, then that would be really in anybody's best interest. The home prices aren't going down. Georgia's been incredible. Our economy here, you see that in Gwinnett, right?
Oh
I mean,
yeah, for sure.
yeah, over a million people now,
Right. Right.
and 17 cities. So
Everybody
it's
coming
just,
here.
yeah, yeah. And
Especially the transplants. And you may be seeing this also. People leave
yes,
the high income states like Texas and not Texas, but New York
New
and
York,
California,
yeah.
Illinois, those type of states. They're losing population, and a lot of them are coming here.
Yeah, I just had this in one of my closings a couple weeks ago. He relocated from New Jersey, and that's what he was saying, 1,800 square foot home, taxes
They're
20,000.
rich.
Yeah, and he can come down here and he's got to pay private school up there because the schools aren't as good.
Mhm.
So yeah, we have and we have a lot of California people moving here as well.
Sure.
So they're, to them, really they feel like, and because of being able to work remote as well, right? So for those markets, we're cheap.
I said
Yeah, I know that for those of us
they're
who are
rich when they come here. They got money to spend.
exactly, exactly. Yes, yes. Yeah. And we have the way that we can continue growing, right? I mean, we have I'm out in Gwinnett, so I can go, my gosh, I can get around anywhere. But when I look at from Paulding County to Barrow County to Bartow County up Cobb side to Stockbridge past Peachtree Corners, I mean, the area is just only we have no, Lake Lanier, Lake Hartwell. Those are people are even moving out there for their primary residence. Used to be,
Right.
just second home, but they're like, no, I want, and you got a lot of people wanting land. So we do,
That's huge. That's huge.
yeah,
Tell people about, because people hear about the traffic, the commute. And
yeah.
in some cases, they say it's worse in California. Um, what's the impact of the interstate issues or traffic here impacting on whether a person chooses to move to the Atlanta area?
You know, I have not had people comment about that. Although the guy from New Jersey did say, well, he will miss that up there he can walk to the grocery store, or walk to restaurants. It's a suburb in Jersey. But he said, the trade-off is, yes, I'm saving that much in my taxes.
Okay.
And
It's a
actually,
trade-off.
like, we have a lot of obviously diversity with the restaurants here. So I think that people just learn to time it. I know for me, like if I have to go to a closing in Woodstock, 9 o'clock in the morning, and I see it's raining, I know I've got to allow an hour and a half.
Okay.
And so, you just do it.
Okay.
I don't know if the transportation, I know out in Gwinnett, we had the transport, actually every county, right? Well, Cobb, Gwinnett, we had the transportation, on the ballot and it didn't pass. And, it's a tough call to add it after you've got the growth.
Mhm.
So, yeah, but then here my daughter wants to go. I'm from upstate New York. She wants to go to New York City for Christmas and then be able to, she thinks she can take a train from there up to my parents, which is the Adirondack Mountains. There's no train. So in a way, I was thinking about that. Like, okay, here she's going up to New York. She'd still have to take a plane from the city
Does she
to,
know that?
yeah, I told her to Syracuse, and then I got to drive an hour and a half to pick her up. So there's no perfect situation.
Okay, I know if people came down here and put it into the equation because they hear so much about it, right? I thought maybe
I have not had
the
anybody.
measures. Okay,
Yep. Not a negative. Nope. Even
Interesting.
real estate agents, I think about it, and it's not uncommon for them to show 30 homes in a weekend for somebody relocating. And that's not actually ever been a conversation that anybody has said anything about is the traffic.
What are the questions? Is it about school? Is it about the media economy? It's about, I guess, people who come down here. The primary is going to have a job, but maybe their spouse may have to come down here and look, or maybe their child may be getting ready to graduate. How are questions about how's the economy in regards to job job availability?
Yeah, most people who are moving here, it's for jobs, or they already have a job and they can work remote.
Mhm.
And Georgia has become it's been the buzzword for a while, but there's a lot of um, connectivity to families here. So there's grandparents who are retiring here.
Sure,
Before they would have retired in Florida.
sure.
Now with the insurance coverages that are so expensive in Florida, the hazard insurance, homeowners insurance because of all the hurricanes. So
Yeah,
yeah, Georgia has definitely become more of a senior state. So we really have all markets, I feel.
it's
The
interesting.
school system, I just did the principal of the day last Wednesday, and it is so well run, our school systems. It is unbelievable that, all the principal to the VP, the vice principals, the assistant vice, everybody has their job. The cafeteria, the food was amazing. It was to me no different than hospital food, which I think is really good. You've got your salad bar. They had drink choices.
It's a lot better than when we were going to school, though.
Yeah, 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 yeah. And then we have our colleges, right? So, great colleges with the Hope Scholarship, which the Zell was a free tuition if you had over, say a 3.5. Well, now, or 3.75. Then you had the Hope, which was over a 3.0, which gave a certain, well, now the legislation has it where it's the same, the Hope and the Zell. So
Okay.
that's very attractive. And then the hospital systems, I know I see it out here. I do so many in the hospital system, there are loans, mortgages, and there's, from Kennestone to Piedmont in town to Northside Gwinnett up to what's the one, North Jackson, North Georgia hospital system.
Hmm.
So that's why we're getting people here. So you've got a great hospital system, you've got excellent schools, you have um, very good sports and entertainment. So the entertainment is crazy, right?
Sure,
People
sure.
can go to baseball, Brave Stadium, which is beautiful,
Mhm.
the Falcons, yeah, and our entertainment, our music. So yeah, I love it here. I think it's
But
great.
it's the entertainment. Then I guess it's the diversity of industry. I mean,
Yes,
we're not a one trick pony like we used to be. All kind of like rests on the shoulders of one industry like Delta or someone like that. We are very diverse. So one industry go down, the other one may go up. Um,
right.
and also, I think the fact that we do have Georgia Power, uh,
Yes,
which is, and I did not notice that Georgia has its own grid, which I didn't know that until something was talking about with the power plant coming over.
mhm,
And I think that's a plus that a lot of states up north are kind of like wishing they had.
yes, yeah, they're very vulnerable.
Yes, yes, yes. So,
Yeah,
so I imagine that may not be a conversation that you may have, but I guess it should be. I mean,
right.
that's a
Well,
plus.
yeah, where my parents are, everyone up there has to have a separate wood shed for wood burning fuel on top of the regular power because it's so expensive.
Wow. How expensive is
Yeah, very expensive. Yeah, my dad has to get, I think he'll get like 2 quart of wood or 4 quart, something like that. But literally twice a day he'll go out, and that's the hot water, so that heats the hot water in the house.
wow, wow.
Yeah, my sister on one side, they have it. My other sister on the other side, they have that.
And they
Yeah,
can use propane, right? Not just regular gas. They
they can use, yes, propane. Yes, yeah, they can have that tank filled. Yeah. Yeah.
So that's a
That's the
good
other thing
example.
too, though, is, our government regulations here in Georgia are pretty good. If somebody wants to start a business,
Yes,
we're very pro-business. And
yes,
so that's, and of course the weather, right?
yes.
We do get all seasons, right?
We got all seasons, and but
Yeah.
we don't we have a very minimum time of the harsh seasons,
Right.
which I
Yes.
think is another reason why people are moving from the north down here.
Yes. Yes. Yeah. I mean, you don't have to have snow tires or, you can get away without snow boots,
Right,
if you want
right,
to.
right.
So, yeah. And if we get the once a year snow, we're all like, yay.
Once a week. So yeah, yeah.
Yeah. Yeah. Yeah. Yeah. Yeah.
Excellent. Well, let's see. To wrap up our time, give the people something to know about you and how they get a hold of you.
Yeah. So, I always tell people, Katrina, like the hurricane, which I know I'm really aging myself when I say that. But my cell phone is 678-778-6858. And again, Katrina Luchasano, Silverton Mortgage. My cell again, 678-778-6858. And that's probably the best. It's just a text.
No, no
My
website?
email is, I'm sorry?
No website?
So that would be, so it's Silverton Mortgage backslash K Lucisano, Lucisano.
Okay. I think that's pretty cool that you actually give out your personal, I don't know if personal, but
Oh, yeah, I am always, I've had it for, my gosh, ever since
yeah,
30
yeah,
years.
I know, yeah,
Yeah.
yeah, yeah.
And I am, text, call, whatever. So I'm always on duty, I'm the front end. So if there's any questions, I always tell people like better to ask a question if you're not sure than to, go out and look at a house. Like don't call an agent and say, "Oh, I want to see this house," and then you haven't even talked to me yet.
And you can't afford it.
Right, exactly. Because the property taxes are different in every county. So I want to be able to make sure, here's what that is. If the interest rates go up, I've got to pad that in to make sure you can qualify, or you may need to buy the next house or put more money down. So we need to know these things up front.
Let me answer this. It's something that just came to my mind. If you are a parent and your child looking at coming down here and you may want to stay where you are, I've heard that rather than having your child live in a dorm, if they have friends that they're coming down with, it may be cheaper for them to buy a house or
Yes,
a townhome, and if they have good friends, like they could put them in there and just charge them rent.
correct. Yeah. So a parent could be the non-occupant co-borrower for the child. Child doesn't have to have any income at all. They do need to have a credit score, which they will get with 6 months of credit.
Mm,
So, as a parent, the best way to you to help your child build credit is to put them as an authorized user on one of your credit cards. And then that will report on their credit. So that'll give them a credit score.
okay.
And then, so if the parent, because if you want to buy it, the parent yourself for your school age child to live in, college age, then it would be considered an investment property. So you'd have to put 20% down, whereas you could put as little as 3% down, sign as a non-occupant co-borrower, and then you're still on the loan. So you could obviously then, able to control that. And then your child is building that credit that way. And you're all on the title. So, you could sell it someday. And your child would not have to have the capital gains
Hmm.
as investment property because it's their primary residence.
Hmm. And I
Uh,
guess if they want to go a step further, they could make that a business, and
Sure.
they could be
Yeah. I always tell
property
people,
manager, do a property management company, whatever,
yep,
whatever, and then use that as a go-between between the son, the occupant, and them. And so if they have
correct.
business also, that could be another write-off.
Right, yeah. I always tell people because really the rule is on the capital gains is really 2 years is what you want to stay in a property to maximize. Some people, they've had to within a year move I mean, that's tough. You got to pay all those taxes, but it is what it is. But
Mhm.
if you could stay for 2 years, then yes, you could convert that property then to a rental, and then you could turn around and purchase a new property yourself. So
Okay,
now
they have to wait that 2 years. They can't do it immediately as a rental property.
you know, because then you can if you are putting the 20% down. So
Gotcha.
if you're buying it as an investment property, you could do that.
Okay.
But
Okay.
if you're buying it as a primary, then I mean, really, we say 12 months, but again, I'm looking more at the financial,
Gotcha.
make sense of it, that the capital gains, and that's a different,
Yeah, that's fine. Yeah,
yeah,
this little rabbit hole that
yeah, yeah, yeah,
I thought that be
yeah. One other thing though, just to mention too, is so, and I just had a call earlier from one of my clients that their father had passed away. So they're looking at getting their mother closer to them. And now that's going to not be, the mom's not going to be able to sell the house yet, having to navigate through all of the estate. So a child can buy a house for a parent that doesn't have enough income or no income. So it's the reverse. So instead of them having to co-sign, they actually buy it themselves, the child as their primary residence, even though they're not going to live in it. But
So
a parent can
how would that
buy,
benefit them though?
well, so that way with mom, she can be able to then get into a house now that now allows her time to be able to get through the estate on the other and not have to deal with getting a loan herself when maybe she can't qualify right now. She probably can't until
Okay.
she can get everything transitioned over. So there's a lot of aged parents who are on a very limited Social Security budget and they can't afford a house in Metro Atlanta,
Right.
but yet they can't really afford senior living.
Okay.
Um, so those are ways where the adult children can then buy the house and it's treated as a primary residence. So that means they can put down only 5%.
Okay.
And
So
they're
can
buying
they
it
have two
and
primaries?
yes, yes, that's the way that they can do that. Yes.
Okay. Okay. Okay.
Yeah, yeah.
How would that economically benefit them, or is there any outstanding economic benefit outside of just being able to provide that house for their parent at 5% interest?
Just to be able to help their parent.
Okay.
Yeah. Yeah. Yeah.
Interesting, fascinating. See,
Yeah.
that's why I come to you, Katrina. That's why
Yeah.
I come to you. I appreciate your time, and then
Well, thank you.
give the people one more shot at your information again.
Okay, so it's Katrina Lucisano, Lucisano. My cell phone is 678-778-6858. Email katrina.lucisano@silvertonmortgage.com.
Excellent. Appreciate your time.
Okay, thank you so much.
My pleasure. I'll talk to you soon.
Okay, all right, thank you. All
Bye.
right, bye-bye.